The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or APR. They tell us the number you need to put in your mortgage calculator to find out what your monthly principal and interest payment will be. If you don't have a mortgage calculator, and I know most of us don't, but you can get one free. RonIsMyLender.com. RonIsMyLender.com. That's our mobile app. You need to have it. Why? Because you need to know what your number is. What's the number that makes sense to you to restructure your home loans? Maybe you need to call us and find out what your blended household interest rate is, because you might have a 3% interest rate, and who cares? Because by the time you add all of the other interest rates, your HELOC, your credit cards, your car loans, student loans, you might be over 7, 8%, 9% in interest. Just throwing that out there for you. So what did the rates do? Conventional 30-year fixed down 6.062. Jumbo 30-year fixed down 6.347. FHA 30-year fixed down 5.825. VA 30-year fixed. This is not right, Josh. We can't do this. I know it is what it is. 5.487 on the VA loan. That one was up. USDA 30-year fixed. Rural areas, generally no down payment. 5.85. 5.85 on the 30-year fixed on that. If you want our market thoughts each morning, as early as the data allows, we put out a report, rsrlinks.com/market minute, rsrlinks.com/market minute. We put that out each and every weekday morning or business morning to give you our idea of where the markets are heading, what they're doing. So let's take a look and see what the markets are doing today. The S&P 500 is now up 9.52. Oil's moving the wrong direction, so we better be careful here in California. Let's look at the 10-year Treasury, up 2 basis points. Mortgage-backed securities are down a basis point. We're just going to call that flat. They're doing absolutely nothing on this Monday morning. Nothing really to worry about, nothing to think about right there. Let's see what we're contemplating. Well, some of the Federal Reserve members, Fed Governor Waller is a voting member and one of the most influential members of the Fed, was asked why the Fed cut 50 basis points instead of 25. He said, quote, inflation is on a lower path than we were potentially expecting. I think inflation is on the right path as long as we don't let it get too low, unquote. Very interesting to see Fed members now worried that inflation may get too low. We wonder if they're seeing something we're not. Additionally, just because the current rate of inflation has decelerated, all the price increases from the past few years are still there. So yes, even though we're not going up as much, eggs might be going from, $6 a dozen to $6.25 a dozen instead of $7 a dozen. Doesn't mean they went backwards. Think about that. Going down the freeway, 70 miles an hour, you see a police officer. You're in a 65 zone. You slow down to 65. Are you going backwards? No. You're still moving along on the freeway. Of course, this is Southern California. You don't get to go full speeds very often. But you're still moving along the freeway at 65 miles an hour. You're going forward. Same idea with inflation. It's going forward. It's going up, just not quite as fast. Minneapolis Fed President Neil Kashkari. I think he might have something might have frozen when he moved to Minneapolis.
Such an idiot.
Yeah.
Such an idiot.
Yeah.
Such
Sorry
an
about
idiot.
that.
Such an
His comment
idiot.
is, quote,
Such an idiot.
okay, we got
Such
it. We
an
got
idiot.
it.
Such an
We
idiot.
can't stop this
Such
thing.
an idiot. Such an idiot.
There we go. Even our board knows he's an idiot. Quote, the balance of risks has shifted away from higher inflation and toward the risk of further weakening of the labor market, warranting a lower federal funds rate. Even after that cut, the overall stance of policy remains tight, unquote. That means they're still thinking that we need to give a little bit more in the way of cuts. That'd be good. Big news this week, Friday's personal consumption expenditures report. The market is expecting the headline reading to come in and attain 0.1% for August bringing the year-over-year reading down to from 2.5 to 2.3. More important, core is expected to rise somewhere between 0.2% and 0.24%, depending on which estimates you're looking at, even though this would not be a terrible monthly reading. The replacement from last year is very low at 0.098, which means that any reading above that will cause the year-over-year number to rise. The market is anticipating core inflation to rise on a year-over-year basis from 2.62 to 2.7 or maybe even 2.8. Depending on the monthly reading, the market should be already anticipating this, as Powell gave an estimate during last week's Fed meeting of 2.7%. And even with that, the Fed decided to cut 50 basis points. Additionally, the Fed is aware that the monthly readings have been tamer, and because the replacements from last year are so low, it'll be hard to make progress on the yearly figures. The Fed's summary of economic projections showed that the Fed believes that the core PCE will end the year at 2.6%. So they're not expecting much more progress this year. It's not until next year that the Fed thinks core PCE will drop to 2.2% and not hit their 2% target until 2026. Thankfully, at least some of them are looking forward and realize that, you know something, it could be the jobs issue, the employment issue, that might be more of a problem to worry about than inflation. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You need to make the call, 800-306-1990, 800-306-1990.